Good evening, this is Ryan Mallory for Shareplanner.com. Today is January 19th, 2011. Wanted to do a market wrap-up for you all today and go over the price action that we saw. There was some pretty significant price moves in the broader markets today, with the S&P down 1%, the NASDAQ down about 1.5%, and the Dow Jones down. On the surface it looks surprising, but not really when you dissect it. It was only down 12.6 points. The reason why the Dow was not down much was because IBM was up 3.4 points. Now you're trying to think, why does a 3% move in one of the 30 stocks in the Dow keep it from moving down plus 100 points on the day? Simple. The Dow is price weighted, not market weighted. So when a stock like IBM, which is 155, it has a much larger bearing, even though it's smaller than a company like Microsoft. It has a much larger impact on that particular index because it's basically 6 times the size of Microsoft. So, if Microsoft wants to equate or equal the same kind of move or have the same kind of impact that IBM had on the market or on the Dow Jones today, Microsoft has to move like 6% for every 1%. So it basically would have to be up 18% today to have as much of an impact as IBM did. So that tells you, the Dow is basically a joke. I never watch it. I could never tell you what the closing prices of the Dow, how many points up it was or down, because I just don't really pay any attention to it. So IBM was basically the main reason why the Dow, actually it was the only reason why the Dow was only down 12 points today. But back to the S&P. Alright, so when you look at this chart here, one thing that sticks out to me right away is the evening star formation that we got today. You have, and by evening star, I mean by the action that we saw on Friday, which was a strong up move, and then yesterday, which was a doji pattern, and then today, which is a strong bar down. That is a textbook evening star, and usually what that indicates is that there is a short-term top in the market. It doesn't always play out that way, but I would say the great majority of the time there's going to be further selling in the days ahead. Now, I was thinking a lot about going short or going long on QID but short the NASDAQ, so it's like a leverage 2x, so that with QID it goes up 2x for whatever the NASDAQ does in the opposite direction. So with the S&P, the reason why I didn't go short on the NASDAQ is, and I use the S&P as my compass for the markets. I don't use the NASDAQ or anything else. I use the NASDAQ if the setup's better than what I could get in the S&P or whatever. And in this case, QID, I would only have to risk about 3% of my position on the trade. But it didn't close below the 10-day moving average. There was no significant technical damage to this existing trend, and I was looking just for one thing that would point out that, okay, maybe there's a little bit of damage being done, and that was a close below the 10-day moving average. We didn't get that. In fact, it's 34 straight days now that we've closed above the 10-day moving average, dating back to 12/1. So, I mean, we're a better part of a month and a half above the 10-day moving average. The record's like 59, I believe, so we got a long ways to go before that. But I do think we'll probably see some further movement to the downside. I don't know if that'll include us breaking below this trend line here, but I do think that that's a possibility at this point. I mean, it's a very narrow price channel, and the reason why I sold out, I talked about how we were up against the upper line on this price channel, and that it was reason enough for me to sell on Friday. So why is it not good enough reason for me to go long on a test of the bottom one? Main reason was because I didn't base my decision solely on this price channel. I fully expected we could break out of it. We didn't do that. But what I combined that with, though, was the fact that on the Bollinger Bands we were closing outside of it, like we did here 2 days in a row. And then if you look at like the breadth in the markets, I mean, it was steadily getting worse despite the market going up. You have indicators like the RSI that shows a bearish divergence. It got very uneasy for me on Friday, and I felt like there was more risk in this market than there was reward, and that's the reason why I sold out, because I always want reward to be in my favor. When risk outweighs the reward, then I get out. So if we would have closed below the 10-day moving average, I would have bought QID at the close. I did not do that, and as a result, the only position I'm holding into tomorrow is GLD, the gold ETF, which I'm shorting. Hasn't done much for me yet. I'm barely profitable, but uh, I do think though that there does exist the fact that we could break this lower channel in. Another thing too is, I mean, the Bollinger Band's well below it, so in fact it's even below the trend line that started back on 9/1. I could ultimately see this, and this isn't the strongest of channels right here, okay? I mean, it's so thin, it's so narrow, it doesn't take much of a price move to break out of it. What would become more significant is if we sell off so much that we actually test this 1250 level on the S&P, which, because it's an ascending trend line, it continues to get higher in every day, so it'll probably be like 1252 or so tomorrow. But that would be about 30 points away, and a break of that could really wreak havoc on the markets, because then you would have a new support level at around 1235 or so, or the 50-day moving average. So there's a lot going on here. This price move, not today so much, but I guess the fact that it did sell off like this pattern had here. We had a big strong day followed by Doge, followed with more follow through. We had this playing out back on Wednesday of last week, where we had a strong day followed by Doji with another follow through, and then we proceeded to sell off 3 days in a row. We've got two. Well, we finished up yesterday, but it was a Doji similar to this here, but we did sell off pretty strong today. I'm not inclined at all to go long on this market at this point. Yes, we held the 10-day, and I thought about it for a split second. Is this a position where I want to maybe fade this move and go long at the close? I decided against that. For one, we're still pretty oversold in the markets. Two, things like the NYSE reversal indicator that I publish weekly shows that we're getting very toppy. So I felt like it was more of a roll of the dice to go long at the close than it was really a calculated risk. Now, if we would have closed below the 10-day moving average, I would have shorted this market overnight, and I thought that was a very good trade setup. But we didn't get that. My whole thesis didn't come together like I was hoping it to. So it didn't play out that way. So going into tomorrow, what you guys want to be looking for, and I'll go over the other indices here real quick as well, but you want to watch this trend line here. So this trend line's roughly around 1276. See what happens if we test that. Does the bulls come flooding in and provide this market with some support, or do we actually break below it and test the 20-day average, or more importantly, this trend line dating back to September 1st here? Those are the key levels that you want to be watching. And the volume today, the volume was above average. It wasn't like yesterday, so you can't say that there was a lot of panic in the selling today. Yes, the selling was pretty steep, but there wasn't like a huge price bar like what we would have seen like here. Let's look at the NASDAQ here real quick too. The NASDAQ looks like it closed below the 10-day moving average, and it did. So that is a break from a technical perspective, but you can see here that it has more of a willingness to drop below the 10-day than what the S&P has done in the past, as you can see from 1231 when we sold off there. The Russell was another stock that I was looking at, in particular this ETF. Going back to late August, you can see it's been on this brilliant trend here, and finally it broke below it today, which could offer a good shorting opportunity to at least the 50-day moving average. I didn't take that either, just because I was using the S&P as my gauge for the market to determine whether or not this market has some follow through or not tomorrow. I think it does. I just don't think the odds are in my favor, as drastically in my favor as I would like. So I didn't pull the trigger on the trade. All right. With that being said, get some rest. Hopefully you guys are able to weathered the storm out pretty good, that you didn't have too many long positions, or at least positions that got hammered today. And we'll be back ready for tomorrow and tackle these markets once again. So long for now.